listeners. This week on the What Does This Mean for Africa segment, we're talking gold. The French will say l'or. Gold has been in the headlines this week. The Financial Times had the headline, Gold rips past $5,000 on fears of global turmoil. Another headline from the FT reads, Dollar sinks to 4-month low. The Wall Street Journal reports, gold surges past $5,000 on shutdown fears. But these are not just headlines for commodity traders or people who are interested in the gold business. It's deeper than that. And that's why on this episode, we're asking, what does this mean for Africa? For entrepreneurs and individuals leading businesses in Africa, how should you think about growth and risk? Let's break it down. You see, anytime investors sense some uncertainty in markets globally, they tend to move their money from risky investment into safe haven. And one of the safe havens is gold. So investors typically historically would buy gold. So the price of gold has become a leading indicator for most people, such that once people start to see the prices of gold go up, they know investors are seeing uncertainty. Let's quickly move into the gold market, take advantage of prices now, buy it low and sell it high when it finally hits a ceiling. Some people would even look to this as a business opportunity. Buy gold when it's low. As the price goes up, you sell it and then you make a spread. So this is generally what happens. And now prices of gold are going up, meaning investors are sensing uncertainty and people are taking advantage of it. So the point where now people are asking, what other resources or minerals can we invest in that's similar to gold? Because now the price of gold is now past $5,000 an ounce. And your guesses are good as mine. What other mineral? Silver. So investors are now starting to buy silver. And this is also driving the price of silver. Now, the question you might be asking is, what does this mean for Africa? Africa is considered as a risky market. So as investors move their monies away from risky markets, it means that investors will start to move away their monies from investment in Africa. And this doesn't look good for African entrepreneurs, because if you own a business that had money invested in there and you have your investors who are outside of the African continent pulling out their monies and repatriating their funds, then this might affect your business. Because a lot of the monies that investment in African businesses come from outside of the continent. The other thing is, for investors who are now looking to invest in the market, they might think this is not the time to invest because things are risky. We would invest when things are much more stable. The third thing is, for investors who even decide to invest, they might be looking for a higher return on investment, because think about it. A lot of the monies that are coming to Africa is patient capital. What this means, below market rates, and they're given with favorable terms, and investors like that. Entrepreneurs like that. As an entrepreneur, you're not just building your business. Sometimes you have to invest in frameworks and structures around your business, like roads. What this means is that the money you're getting in your business doesn't just go into generating profits in the short term. They go into fixing the things around your business that would create an opportunity, the framework or the foundation for your business to thrive. So you need some patient capital to do this, so that it gives you some wiggle room to create value in the long term. But this is not just negative. This might also prove as an opportunity for some people, especially for people who export outside the African continent. Because think about it. If you are an exporter and now the dollar is weak, it means that when you now sell, you get more dollars for your goods. For also people who import into the African continent, you are importing things as in dollar. And now because your currency relatively has appreciated against the US dollar, and you're able to import more things or buy things at a cheaper dollar value. So this looks good for people who either in the export business or in the import business. Now, what I want you to derive from these things that are happening is that as an entrepreneur, what this means is you need to be able to demonstrate to still get money into the African continent. You need to be able to demonstrate value beyond just rhetoric. You need to be able to prove to investors that you can create value and maintain value such that they should invest in your business. And we've seen businesses like Dangote Petroleum Refinery, and you know what? If you invest in our refinery, we would pay you dividends in dollar, because when there's uncertainty, investors like to hear things they are familiar with, and things they're familiar with is gold, dollar. So as long as you're able to give them something that sounds familiar to them, you get their attention. The second thing as an entrepreneur you might be looking to do is take advantage of things like this. Investors are looking forward to invest in gold. So what you can do is that you can this creates opportunity in spaces where you can create an asset backed with gold or back an asset pegged to the price of gold. And this sounds good to investors because they know, okay, once we bring monies into this economy, we can invest in this gold-backed assets, and later on when things start to become stable, we can now exit out of these opportunities and now invest in other business that we're interested in. And this will be a way to still get money onto the continent. The third thing is FX, hedge against FX, because now things are quite unstable. The dollar has depreciated. You can now start to hedge against the market in terms of US dollar, because you would always have to go back to the market to buy in US dollar. So take advantage of that, hedge the FX risk, and then when things start to normalize, you can exit out of this position. As an entrepreneur, you need to be able to read between the finance and still see opportunity and take advantage of opportunities, because there would still be opportunities even when things look like they are not going well. And the broader lesson here is when uncertainty rises, investors crave certainty. They gravitate towards what they recognize and understand, assets like gold and the US dollar. As an entrepreneur, the underlying question driving your strategy should be, how do you package opportunity in a way that feels familiar, credible, and resilient? It's all for today for our segment, What Does This Mean for Africa? This is my personal analysis of things in the headlines based on the information we have. Want to know your thoughts on what's happening in the market, and feel free to also share any analysis you have about things that are going on in the market. And who knows, we can invite you as a guest here so we can do a deep dive on things that are happening in the world of business. Once again, thank you for sticking around and listening to us. My name is Daniel, the host of the Tea Time Global podcast, and this segment is What Does This Mean for Africa? Catch you next.